Lesson 14. Why is profit not equal to cash? Let us understand this by using some examples. You have two statements in front of you. On the left hand side you have the income statement, and on the right hand side you have the cash flow statement. Let us look at a few transactions and understand how these impact the income statement and the cash flow statement. Assume that the business sells goods on credit worth $100. Now, as per the accrual concept, this is recognized as a sale on the date of the transaction. So in the income statement, you have $100 in revenue. There are no other transactions, and therefore the net income is $100. At the same time, the cash flow statement is not affected because there is no cash inflow or outflow in this transaction. Next, it purchases raw materials worth $75 and pays $25 on delivery, and the rest is on credit. So as far as the income statement is concerned, irrespective of whether cash is paid or not, the entire transaction is accounted for as costs. So on the income statement, you have costs of 75, and therefore your gross margin is 25. However, since the business has paid $25 as cash in the cash flow statement under operating activities, since this is one of the main activities of the business, you have a cash outflow of $25. So the gross margin and the net income are 25, and your total cash generated is minus 25. Next, it collects $75 from customers to whom the goods were already sold. So as far as the income statement is concerned, there is no transaction because the revenue has already been accounted. Whereas in the cash flow statement, the operating activities, which was minus 25, now become plus 50. Minus 25 plus 75 equal to plus 50, and therefore the total cash generated is $50. Next, it takes a bank loan of $250 from AMZ Bank. Again, this is something which is of a liability in nature. It is neither expense nor cost nor revenue, and therefore does not appear on the income statement. So this bank loan, there is a cash inflow. It is not an operating activity, it is not an investing activity, but it is a financing activity. So you have $250 under financing activities, and the total cash generated is $300. So as you could see, the profit still remains same at $25, but the cash balance is $300. So therefore, profit and cash are not the same thing, and they can differ depending from situation to situation and based on the impact of various transactions. So summary, profit does not equal to cash, and this could be due to a variety of reasons: operating, financing, and investing.